Hi everyone, Stacy Whiter here on behalf of Campus Mortgage with some quick tips for you on avoiding closing delays part 1. Now just a quick reminder before we get started, this video is for informational purposes only and should not be considered legal advice or used in place of any government guidelines. Also, this video was created on January 30th, 2017, and the information contained in this video is subject to change without notice. A great deal of closing delays and application blow-ups can be avoided by asking the right questions at application. We're going to take a look at some easy questions you can ask up front to save yourself and your customers time and potential delays. Now, although these questions ideally should be asked at application, don't hesitate to dig deeper while the file is in process. So for example, if you're a processor and you notice some of these items were not addressed at application, don't hesitate to dig deeper. The earlier you address potential issues, the better off the process will be. Let's start off with important dates and residence and employment information. Now, most people, when they take an application to find out how long someone has lived at a certain address or how long they've been with a certain employer, will typically say something like this. How long have you lived at 1234 Maple Street? Or how long have you worked for ABC Company? And what can sometimes happen is the borrower doesn't realize that you need exactly 2 years of residence and employment history, so they'll estimate. They may have really only worked there for 1 year and 9 months, so they say, oh, I worked here for 2 years. Then you take them on that information, and then later on in the process you find out you've got that 1 month that you have to account for, so you have to go back and get the previous residence or employment history. So instead of doing that, just change your question a little bit. Instead of saying how long have you lived or how long have you worked for, instead say what month and year did you move into 1234 Maple Street? Or what month and year did you start working for ABC Company? This will ensure that you get that full 2-year residence and employment history and save you some headaches later on. So now let's talk about income and deductions. When you get to the part where you're talking about the borrower's income, ask them what type of income do they receive? Are they a standard W-2 employee? Are they self-employed? Very important. You definitely want to know that on the front end. Here's one that you may not think about. Do they have a side business? So what I mean by that, maybe they're a W-2 employee, but they have a side yoga studio or a yoga business that they write off on their tax returns. That's something that you'll definitely want to know up front, because if they claim a large loss, that could potentially impact their income and therefore impact the loan. Are they a contractor? So are they paid by a 1099 and they're not a permanent employee? Are they a temp employee? These are all things that you want to make sure that you have a clear understanding of when you're taking the application so that you can move forward correctly. Now, when it comes to deductions, so here's what I mean by that. Ask them, do they have any type of unusual deductions on their actual pay stub? So for example, maybe they took out a 401k loan from their employer and that repayment is coming out of their paycheck every month. Well, that's going to be counted as a liability and that wouldn't show up on the credit report, so knowing that up front is very helpful. Do they have car payments taken out? Now, this isn't as common, but it does come up. Sometimes you'll have people that work for large car manufacturers and they are purchasing or leasing the car through that company. Look for those type of deductions. Child support, of course, is another big one, and certainly alimony is another deduction to ask for. Now let's talk about assets. Certainly, if they're going to be putting down some sort of down payment, you want to know where those funds are coming from. Are they gift funds? Are they from a family member? Another good question to ask, are they someone that moves money around between accounts? That can be a little bit of a challenge as far as documentation. Sometimes people like to move money between checking and savings and back and forth. Ask that up front because that's going to help you prepare the borrower for additional documentation that you might need. Large deposits seems like a no-brainer, but go ahead and ask the question. Have you made any large deposits in your accounts recently? Go ahead and prepare them that you're going to need that documentation. Another one that is easy to miss is automatic payments. Do they maybe have automatic payments that come out of their account every single month that aren't reported on their credit bureau? That can be another little gotcha because that could be something that could affect their debt to income ratio. And another big one, non-sufficient funds. Ask them, do they have a habit of getting any NSFs or check bouncing or things like that on their asset statements or bank accounts? All right, so just asking these few extra questions at application, digging a little bit deeper can save you a lot of time and your customer a lot of time on the front end and hopefully make it a much smoother closing for you and your customer. All right, well, that's all for now. Thanks so much for watching. For more tips and videos, please visit campusmortgage.org and look for our weekly tips and videos designed for all mortgage professionals, including underwriters, processors, loan officers, closers, and post-closers. We'll see you next time. Have a great day. Bye-bye.